let's get to our conversation on mobile banking and the new technologies surrounding that. We've got a great panel to talk about that. Let me introduce you to them. First of all, we've got Paul Taylor. He is the US Business Technology and Telecoms Editor at the Financial Times. Mike Kennedy is also with us, EVP, Head of Innovation and Payment Strategy at Wells Fargo. Gautam Jain is a Global Head of Client Access at Standard Chartered Bank, and Ineke Boesemaker is the EVP of Payment Services and Savings at Rabobank in the Netherlands. Thanks so much to all of you for joining us. Paul, let's start with you. Put this session in context for us. You know, how important is mobile banking on the agenda at this Sibos?
I think it's a very important subject because banks really have to respond to changes in their marketplace, particularly demographic changes. And they have to go where their customers are. And their customers have smartphones, they have tablets. In the developing world where a lot of people don't have bank accounts at all, the phone can actually become the bank account. So it enables banking for the unbanked, if you like. So I really think it's a mainstream subject, and its uptake in both the developing and the emerging markets has been growing quite considerably. For example, in New York City, I can pay for my cab fare with my smartphone using a technology called NFC, which is near field communications. I just tap and pay and off I go. There are some challenges, however. There's a battle in some markets between the banks, the credit card issuers, and the telecoms companies over who actually controls the mobile banking ecosystem. And we're going to, I'm sure, get into that during our discussion. Okay, well, Michael is there. He's a bank, if you like. And so who are the customers that are using this, and what are they asking you for more and more of, and what do they find difficult to grapple with?
So we have a wide breadth of customers at Wells Fargo. If you look on the retail side alone, we have over 10 million mobile banking customers, and they range in what they look like, their demographics, as well as what they're using mobile banking for. Probably the biggest use case is checking your balances, whether that be via text banking, a mobile banking application, or using the mobile web. And so checking the balances, using the application to check where the closest ATM or store is, to make it easy for you if you want to go get money and you're in a new city, to moving to things like transactions, doing your bill pay on your phone while you're on the subway on the way to or from work, sending P2P, so if I need to pay Paul back for dinner, I can just pull up my phone, send him money, and then moving on to more interesting things, like more recently, we really introduced things like taking a picture of your check to deposit it, so you don't even have to go to the ATM or the branch to deposit your check anymore. You can just take a picture of it with your check, and you're done. And how are you doing that at Standard Chartered using mobile banking?
Mobile technology is very important for us in Standard Chartered because primarily we are an Asian, Africa, Middle East bank. And if you look at the demographics of our population, we have a fairly large unbanked population. When over 1 billion people, depending upon what study you look at, they don't have bank accounts, but by God, they have a mobile phone, right? So in terms of financial inclusion, in terms of taking banking to our clients and to their clients, mobile is going to play a huge role for us, both as a channel and as a stored value device through which they can do their transactions. So it forms a very big part of our client access strategy, a very big part of our cash management strategy.
And at Rabobank?
Rabobank in the Netherlands. Well, the Netherlands has, one could say, almost one disadvantage. It's already a very efficient payments market. And what do you add when you already are positioned in a very efficient payments market? The mobile phone does have actually a lot of extra features. You always have your mobile phone with you. So it's going to be easy for consumers to pay using their mobile phone. And what we as banks believe and hope, it will be a big replacement of cash. Cash for banks is actually not a lot of fun because running a cash infrastructure is very expensive, and we truly hope that with providing our customers with mobile payment services, that will replace a lot of the inefficient use of cash. We're rolling it out throughout the Netherlands. We've started a pilot actually just this month on September 2nd, a pilot in the Netherlands with the 3 largest banks jointly with MasterCard, VPay, of course, Visa is also a possibility, terminal providers, and a mobile phone operator. And therefore using, almost all the players in one go to get reach and to see how it works out.
Paul, you cover this area a lot. What are you expecting to hear from this session? What do you want to hear?
I certainly want to hear case examples of how mobile banking is being used, but actually we're sort of combining two different things here, mobile payments and, if you like, banking using your mobile. And in some senses, they're two different segments. What I was talking about and what Inika was talking about then is primarily mobile payments. What you were talking about is primarily mobile banking. So there are different segments to this market, and I'm sure we'll tease that out somewhat in our sessions.
Let's talk about the technology that allows you to do both, the payments and the banking. Where are you buying in this technology from? What kinds of technology are you as clients wanting to buy that you're not seeing a lot of in the marketplace yet, or you want to know a little bit more about?
So we look at it in each individual case as a build versus buy. Fortunately, we have the scale that we end up building quite a bit of our mobile banking capabilities, but we always do look for the best of breed in terms of whether we should build it in-house or outsource it. And to date, we haven't had problems meeting any of that demand for the functionality we're looking to do.
And most of the outsourcing you do is where?
So usually on the newer technologies, so some of the new things, maybe where someone has patents on the technology, so in terms of taking a picture of the check, which I mentioned earlier, there's some patents out in the marketplace where you pretty much have to outsource that, and there's some other newer things like that where we want to get to market quickly and don't have the time to build it in-house quite yet.
We take the in-house development approach as well because we clearly feel that this is going to be a differentiator. But what we also do is we leverage the native features of the mobile operating systems as much as we can so that we reduce our development cycles and we don't reinvent the wheel. For example, geolocation. It's a native feature on all mobile operating systems. There's no point building it in our apps again. So we leverage like best of the both worlds.
Combination of both. If you want to provide your customers with mobile payments using contactless technology, you need phones that are NFC enabled, near field communication enabled. Not all phones are. If you want to do this multi-bank, you need a trusted service manager in the middle and a piece of software that provide that trusted service manager capability. We feel strongly that it works best if you sort of joint venture, formally or informally, between banks, mobile operators, and the card companies. In other areas, if we talk about remote mobile payments, we develop some of our platforms ourselves. We have a multi-bank e-payment mechanism, a scheme in the Netherlands, which we're now making mobile. So it was an internet scheme, which we developed ourselves among our banks, is now becoming mobile. So it's a combination of what's available, the other parties you need to play, and our own development.
Interoperability is an important point that, it's not going to work if every bank has its own proprietary system. So as a commentator, I feel from taking the customer's side, if you like, that it's very important that there is interoperability between different systems. And there are some core technologies that are emerging that's enabling this. But let's remember that this is a new field. So, there are a lot of pieces still coming together to make this all happen.
How are you ensuring that, say if I start with Michael's bank here and I want to move over to Standard Chartered, how are you ensuring that myself as a customer, that's going to make it the easiest for me? Because we're at conflicting goals, if you like, when we start to look at interoperability.
Well, I think the payment, if you're making a payment, let's consider a payment from one bank customer to another bank customer. Obviously, you leverage the existing systems, and you, in a sense, you leverage Swift and Swift-type operations. But you probably need, at the base level, some sort of near-field wireless tap and pay technology. You don't necessarily need that on both sides of the transaction. You may initiate the transaction using one technology and accept the payment using a traditional technology. So you don't need interoperability at all levels, but you need it at some levels.
Yeah, and I think it depends on what you're talking about. So if you, again, as we were saying earlier, we're talking about both mobile banking and mobile payments in this session. So from a mobile banking perspective, it's less important to have interoperability, because if you're really just pulling out your mobile device to look at your balances at Wells Fargo, it doesn't matter whether that mobile banking app is interoperable with anyone else's. Once you start to talk about mobile payments, it becomes very important. I think there's been a couple comments about point of sale mobile payments, and that's a case where you want to have a technology that both the issuing bank, whose customer is pulling out their phone, as well as the acquiring bank, who's working with the merchant, are using a scheme that's interoperable. So if I pull out my phone and I walk into the coffee shop, they can accept that payment on the phone. And so my bank has to be interoperable with the acquiring bank for that merchant. Other things like person-to-person payments, making sure that if I want to make a payment from my bank to another bank, that it'll work between the two. And in the US, the three biggest banks, Wells Fargo, JP Morgan Chase, and Bank of America, got together and formed a joint venture clear exchange to enable just that, and we're bringing on board additional banks to can get that full ubiquity for person-to-person payments with that interoperability.
I'm afraid there's no easy answer to this question, right? Because once again, it all depends upon the context in which you're talking about. As Mike said, if it's a bank account, then it's a just channel, right? There is no interoperability. You use a Wells Fargo channel, or you use a Standard Chartered channel, or you use a rubber bank channel. When you talk about mobile wallets, then again, it depends upon whether you're talking about a bank-led model or a telco-led model. If it's a telco-led model, then your e-money in your wallet is your money, right? You can use that to pay anyone, provided the wallets are interoperable between themselves. So eventually what we will see is that there would be clearing mechanisms for mobile money or e-commerce will start developing, which will aid this interoperability, just like we have clearing systems for cash and payments today. But this is an evolution.
I actually see a development which we have not touched upon yet, which is the developing of APIs, application programming interfaces, where lots of providers will provide interfaces, more or less standard interfaces for application developers to interface, and those application developers will be able to sell their application to whoever wants to use it, and that makes the whole world, I would say, more interoperable. There was another thing that I thought about when we talk about payments. Yes, we provide payments, but our customers actually are not interested in the payment. Our customers are interested in purchasing a good or a service. So it's the good or the service, and the whole information and the delivery of a merchant of goods and services that is more important, and the payment just has to be a quick and easy, almost underneath the counter element, but it's the purchase that's really important, and that's the customer experience. And if we make the payment a lot easier for both the consumer and the merchant, it's going to be a much better proposition on two ends.
I think you're absolutely right there. The transaction itself has to be transparent.
No one likes to pay. Everyone wants a good or a service, right?
But it should be as easy as handing over a $10 bill or a euro coin. Consumers don't want to know about the underlying technology, whether it be NFC or...
We don't care.
Yeah, you don't care. It just needs to work.
It needs to work, it needs to be safe.
It needs to be secure, exactly. That's the other thing that we haven't talked about yet, but it must be secure. People have to have faith that they're not going to be charged by accident, for example, as they walk past the terminal. Is it going to grab money out of my mobile wallet? They have to be sure that that's not going to happen. There are initiatives in several areas, one in the US where there's a consortium called ISIS, which is actually a telco consortium, but is partnering with banks and with credit card issuers. And it's designed to create, if you like, an ecosystem that again, consumers won't necessarily be aware of. Maybe they'll see an ISIS stamp, which will show that their device is ISIS capable, but that's all, and it will enable them to make mobile payments at point of service checkout tills, for their newspapers perhaps on the street, things like that. But the further the technology disappears into the background, the better.
As a customer, I couldn't agree with you more. Let me come back on this issue of security that you touched on. What are you doing to make sure that your customers are safe who are using this?
Well, obviously, when you're talking about commerce and you're talking about money, safety is paramount, security is paramount. So we have built up a very secure infrastructure over the past decades in terms of our online banking, our mobile banking now, and taking all of that and continuing to utilize that, plus layering additional security methods on top of it. You have new things with a mobile device that you can do that you can't do when somebody writes a check. I take out a piece of paper, I scribble my name on it and hand it to you, versus I use my mobile device and I know, because I've registered that device in the past, that it really is Mike Kennedy's device. He logged in with his username, he put in his password, we know from geolocation where he is. We know all these things about him that we don't know if I'm handing you cash, if I'm handing you a check. So I think that it can be much more secure, much more secure than most of the other payment types.
I totally agree with Mike. I see. When you talk about mobile as a channel, interoperability becomes an extremely important point. So what we do is, our entire security infrastructure is shared between mobile banking and online banking and host to host. So you use the same credentials across all our platforms. So from a client perspective, it's very easy. He doesn't have to carry like 3 or 4 credentials depending upon what medium he's interacting with us. But when you talk about mobile money and stored value on your device, then security takes a completely different aspect, right? And that is where you have to rely very heavily on pins, encryption of the mobile network itself. But at the end of the day, it's like carrying your wallet. You have to make sure that your wallet is secure, just like your mobile phone. But with technology coming in day by day, I think security is going to get much better. Biometrics, Apple introduced the iPhone with a thumbprint, which definitely makes it much more secure. We will surely see retina scanning and God knows what. I mean, when I look at the crystal ball for security, I don't know what's going to come next, right? Because the pace of technology change is so fast. But yeah, I mean, devices are secure. But yes, I do appreciate that security does remain a concern.
Okay, well, unfortunately, we've got to leave it there. Thanks, everybody, for joining us.